6%. 6% is 1.5% per week. That is easy as you can get that so easy. You don't have to do a lot. Your first year should be trying to control everyday trading. Everyday trading is a loser's recipe. You're going to get terrible results by doing that. I'm telling you to not do something to test your discipline. And if you don't have discipline, you're forging it by doing this. You're creating something that you lack right now. Discipline. What's your multiplier? Because that's the number one thing. You have to have that. If you don't have a multiplier, you can't hit your percentage return. So what is your multiplier? Okay, close your eyes for a second. Not if you're driving. Think about the things that you've watched me engage and record entries on. Now, the entries may be similar to many other trades you've seen me enter on, but there is something that is always the same. I'm aiming for something. I'm either aiming for a fair value gap above where market price is if I'm buying. If it reaches up into that imbalance, that's where I'm unloading. Or if I'm bullish, I'm aiming for an old high or relative equal highs, something with the buy side above it. I'm aiming for that because that's where the market's going to gravitate to. There's so many fucking moves every single week. Every single week, there's so many opportunities for you to not have a fucking job. It's disgusting. But until I put your nose in front of it, hold you there against your will, kicking and screaming, and say, look at this, over and over again, then suddenly it's going to be like, oh shit, there it is. The whole time it's been there. And you're complaining, I don't know why it doesn't do this. And I don't know why, because you're making a mountain out of things that are not important. So it's normal for you to feel those tendencies to be frustrated and feel like you're not getting it, or it's not as easy as you hoped it would be. You should be thankful it's not fucking easy. That makes you superior. But 6% for the first year, that's your goal. 6% per month during the first year's development, that is your end year goal. So you should start your second year with 6% per month. And then you should move to 8% by 3 months into the second year. And then 10%. And I think you should live there for at least 6 to 9 months. 10%? Oh my goodness. You can't make 10%. It's unsustainable. 10%. Man, what the fuck? I've literally made 23, 22, and 21% just in the last couple days per day. And you saw my executions. Hello. Yeah, 10% per month is a fucking comic strip. That's easy. That's literally easy as shit to do. Year three, if you go through exactly how I'm showing you this year, 10% per month is absolutely doable. I don't give a fuck. I'll stand in front of the CFTC and say, yep, you can do that too. It can happen. It's easy. That part's easy. Why? Why is it easy? How can it possibly be obtainable? Number one, you have to know what you're looking for. What repeats every single day? Think. A rush for the market to go one direction or the other. Here's the wonderful thing. You can be dead fucking wrong at the beginning of the day on bias. Here's the secret. Listen. You can be dead fucking wrong on your bias every single day at 9:30. Who gives a shit? Wait that first 30 minutes and see what they do. If you had a liquidity pool that they were aiming for, or likely to be aiming for, in other words, if you think that the market was likely to go up to take out an old high, run some buy stops, right? And the market just immediately tanks. First 30 minutes, this is going down, 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 down. Okay. Well, now you have a easy decision to make. Is there a fair value gap that decline has created and left in its porous wake? In other words, as it's dropped down, did it leave a fair value gap up there that it can go back up into? Some of you that are scalpers may say, okay, I'm going to trust a counter trend move and I'm going to trade up into that, and that's my trade for the morning. That's it, I'm done. Others would wait for it to go up into that fair value gap and then run to another lower low. That's a bread and butter setup. Both of them are. Which one would you personally feel comfortable doing? That's the problem with all of you. You want whatever I've done recently, that's the model you want to do. Much like when you now have seen multiple times now where I say a range shouldn't be filled in, or this is a balanced price range. My stop loss can be ultra tight, and I'm showcasing that, improving it, and typing it out, saying this is exactly what it's not going to do. And now you want to abandon every other pursuit in your learning to now discover that. Because if you could just do that and put that on YouTube and on Twitter and on Instagram, you're elite. That's bullshit. You're wasting time doing that stuff. It's not to say that it's not important to learn, because I'll teach it to you, but that's not it. You have to see what happens every single day. The market's aiming for liquidity, period. That's happening every fucking day. Every day. I'm going to have an exercise for you every single day. You cannot do anything until 10 o'clock. And then we're going to be looking for a pool of liquidity above or below the marketplace. And you have to engage that for 5 handles. Oh, what if I fail? That's fine. It's okay. You're doing it. And doing it is like working out. You don't get abs the first time you did sit-ups. You're not getting a 6-pack abs. You got to get out there and do that shit yourself. So this is how you do it. Every single day, the market seeks liquidity. That's the benefit in being these lower time frames, because there's so many chances to do that. And 5 handles is 5 handles easily done. Now, let's return back to that multiplier. We like the last hour of trading. That right there, some of you, that's the land of milk and honey, because you have all of the day behind you and you have that last hour of trading. If you see that last hour hasn't ran out a target that it's obviously aiming for, that last hour becomes real easy to trade. Or if it hits it in the afternoon session and we start going into that 3 o'clock hour to 4 o'clock Eastern time, and there's a small little shift in market structure and it returns back to a fair value gap, look for a pool of liquidity on the 1 or 5 minute chart. 5 handles, done. But what if it goes 30? Who gives a fuck? You're aiming for 5. Let's say, hypothetically, that your goal is to get funded with $250,000, $250,000 that you were funded with, whether collectively or individually in one prop firm. And you're aiming for, now you're in year 2.5 to 3 years, okay? So you're looking for 10% returns per month. That's 2.5% per week. 2.5%. If you're telling me that you got in this business and you can't make 2.5% in 1 fucking week, what the hell are you here for? Like, what are you doing? 2.5%. You can't do 2.5% in a course of 1 week. If you've been doing this for 3 years, you're doing something wrong. Less than 2.5 years, if you're thinking you're going to get 10% consistently every single month, then that's not going to happen. So let's be real, okay? Can someone that's been versed with price action do 10% per month consistently? Yes. How? How can that be done? Well, number one, let's strip it down to the basic math, and then I'll tell you how to apply your multiplier to it. So you have $250,000 and you're aiming for 10%. So you're trying to get $25,000 for that month. So you take your 25,000 divided by 4. That needs to be broken up of, now we're going to use just one market, and we're going to say my baby is ES, okay? E mini S&P. You are focused on one market. That's it. You take your 25,000, divide that by 4, and then you take that and divide that by 5 days. But you just sat on saying that everyday trading. Yeah, you're a new student. I'm trying to take your attention away from trying to be an everyday trader when you don't know how to trade right now. There's time for all of that once you know what you're doing. You can trade every fucking session after you know what you're doing. Multiple times in the same session, you can do it. You can buy and sell in the same session once you know what you're doing. But right now, you don't know what you're doing. You're going to hurt yourself. So if I'm going to teach you, I'm going to teach you the correct way. And that means I'm going to give you realistic time frames for when things should be expected. What happens if you do really, really well? Could you do it sooner? Yes, but that shouldn't be your goal. You should be doing this with the intent that you're going to do it with these timelines in mind with the intent that you're going to get good with the proper amount of time to allow you to develop into it. Okay, 10%, Michael, that's a little too much for me now. Give me something more realistic. Okay, let's say it's 3%. Oh, a month? Come on, Michael. Seriously, 3%? Dude, that's like your stop loss. Yes, but here's the thing, $250,000. And if you have 3% is your model, you're aiming for 3%. Can you hit 3% in year one per month? At the end of it, yeah, I believe you can. Consistently, probably not every single month because you're still developing. But I think in the same frame of 2.5 to 3 years, I think 3% every single month is absolutely doable. What's the math on that? Well, for $250,000, and you're trying to get 3%, it's $7,500 per month. So you take that same thing, divide it by 4 weeks. And I know some of you are thinking like, this is anybody could do this is elementary math. Yes, but I want you to think about how you're not doing this. So it's so easy, you know the math, but you're fucking still working. Okay, you're still doing fucking oil changes at fucking Jiffy Lube. So you got $7,500 on $2,500 equity. So you funded with $250,000. You're aiming for 3%. Now, some of you are thinking 3%, that's not enough. Listen, folks, listen to the math here. $7,500. Are you making $7,500 right now at your job? Does your boss love you so fucking much that they're rewarding you for 40 hours or more a week in the tune of $7,500 a month? Chances are you're fucking not. Okay. Now, some of you probably make more than that, and that's fine. That's great. Well done. You're still a slave. But $7,500, divide that by 4 weeks. It's $1,875 a week. Now, that's not a lot of money. That's not a lot of money, and that's an easy objective to reach, especially if you're working with $250,000. So you do the same thing. You break that up over points. We're doing with the S&P right now, okay? So if you take $1,875, divide that by $50. That's 1 point, okay? Or one handle. 4 ticks is one handle or 1 point in the S&P. That's $50. Divide that $1,875 by 50. That means you have to earn a net gain of 37.5 handles or points for the week. What? How am I going to do that? Well, per day, it's only 7.5 points. That's easy as shit. That's fucking easy. Now, you split that day of 7.5 points into 2 sessions. You have the morning session, you have the afternoon session, divide it into lunch. You take a lunch hour, go play some PlayStation, Xbox, take a nap, whatever. Come back at 1:30 and work till 4 o'clock and aim for what? The same thing you try to do in the morning. You got 7.5 points that you got to make. That's your goal. That's all you're aiming for the day. You try to get 3.75 handles. That's 1 tick less than 4 handles in the morning and in the afternoon. So aim for 4 handles in the morning, aim for 4 handles in the afternoon, and that covers your commission costs. And you'll net 3.75 handles. You do that every single day, or if you're a swing trader and you say, okay, I can see something on the hourly chart that's going to probably move 40 handles, well, then you just do 1 trade and you're done. But you can split this up into small, little, tiny, bite-sized pieces. And if you've watched what I've been doing and you think that 4 handles is hard, you haven't been watching enough of my videos. You haven't been watching enough of my executions. 4 handles is nothing. Like 4 handles, that can happen in less than 5 minutes, 2 minutes. Like in some instances, on one minute candle, it can do 5 handles because I'm taking you into the time when the market's likely to move like that, aiming for a direction or a bias that's attacking a pool of liquidity or aiming for an inefficiency. Aim for something. What's it reaching for? A pool of liquidity. Bias has nothing to do with it. Where is it at right now? Turn your charts on at 10 o'clock. You do not turn your charts on until 10 o'clock in the morning, New York local time. Find the most recent 5 or 15-minute high or low. What's the market done since the opening? And then aim for that. See which side's been ran out initially. If they've taken out the lows and it's been run up and it's created a short-term high and it's retraced, its chances are it's going to do what? Run that high that just made. If it offers 4 handles, then you execute in your, not your demo, in your observance of watching price, you're going to tape read that. Well, what am I looking for? A fair value gap on a 1 minute chart. It will be there. That's the wonderful thing that you're going to discover, because all this stuff repeats on all these time frames.